Good morning, trading world. It is January 23rd, 2023, and this is my pre-market outlook and technical analysis for day trading the markets. We have somewhat of a big week in earnings coming. The weekly outlook has a bearish bias with a possible retracement of around 392.58. We have what could be perceived as a dissonance between the technical side, which is 50-50, and the quant side, which is bearish. Another thing to watch on the technical side of things is we are at a point on the weekly time frame where we are in the middle of a shift in momentum. Do we reverse and go up or continue trend down? This is evident by the flattening in the angles in the moving average. This is where the game begins. If you believe the coming break will be to the upside, then you buy at lower extremes. If you believe the trend will continue to the downside, then you sell at the upper extremes. Either way, you should use longer dated options because the next trend direction may not be completely evident until the middle or end of February. All right, this week, earnings are at the forefront of trading. Today, the biggest to me is Synchrony Financial. It's important to me because I have longer term shorts on the XLF. Tuesday, we hear from Microsoft, Verizon, GE, and Johnson & Johnson. For me, Microsoft holds a lot of weight in this market, not just from a market cap point of view, but in order for the market to continue to fall, Microsoft as well as Apple will be among the leaders in deciding direction. There are a lot of layoffs happening right now at Microsoft, and this could be a temporary bullish boost on the earnings call, and I do mean temporary boost. Wednesday, we have Tesla, CSX, AT&T, and Boeing. Tuesday and Wednesday you think would be the most volatile days of the week, but volatility continues to expand Thursday and Friday. My guess is that the secondary reaction will be bigger than the initial reaction from earnings. All right, let's get to the key levels of the day. All right, here we are with the key levels of the day. Starting on the resistance side, we have our Jack resistance at the 395 to the 396 area. Queen resistance 397 to the 399 area. And then King resistance 400 to the 402 area. On the support side, we have our Jack support at 394 to the 393 area. Queen support 392 to the 390 area, and then King support 389 to the 387 area. The main thesis for today is a small bearish bias closing below 395.88 with a projected target low of between 395 and 387. The alternate thesis is bullish, closing above the 395.88 with a projected target high of between 396 and 402. The main channel we're in is from 379 up to 397. The main channel above that is 397 up to 416. at the end, well, on the last trading day, on this past trading day, market strength and breadth went on a tear to the upside. Will that momentum continue today? I think it continues, but not before a small pullback, which we may have already gotten in the overnight session. But there is definitely some continuation to the momentum coming. I think well, we have harmony between the technical side, which is a small bearish bias, and the quant side, which is bearish as well. This brings us to the scenarios of the day. All right. Our first and most probable scenario of the day is going to be our rounded reversal day type structure. We could get a continued push higher toward the jack or queen resistance area, find midday chop around either the queen or king resistance before going back down with the same energy or force we went up with the first part of the day. I do want to bring attention to the vice versa alert, which is the complete opposite scenario. It's still the rounded reversal day type structure, but what could end up happening is that we get a big boost pre-market, and we get this pretty much opposite scenario where we end up coming down. We'll continue push lower at the cash open and make our way toward either the jack or queen support area and find our midday chop somewhere between there, possibly the queen, maybe the king support area, before pushing back up with the same energy or force that we came down with the first part of the day. So that is our vice versa alert. All right, our second scenario is going to be our expanded range day structure. We could have an initial push up to a major resistance, consolidate before chopping back down for the day. So this is our expanded range day structure. Our last scenario is our trend day up. We open gap up and start with a push back toward the previous close represented by the blue line. We find support on or before that previous close, then begin the uptrend for the day. Better known as our golden window, the best time of day to trade. We usually find our midday chop around either the possible queen or king resistance. And a lot of times on the trend day, but not every time, we usually start the second half of the day looking to continue the primary trend of the morning. But what usually ends up happening is that it turns into a head fake, where we think we're going to continue up, but we get a retrace or fade back into the close. So that is the trend day up scenario. I don't see it really booming like Friday, but it is still possible, slightly possible, that we get a trend day up scenario. What really unnerved me is if we got a continued booming trend day to where VIX continue to either not lose off or fall off at all, but actually continued up. That would start speaking that we're at kind of the end of the rope, and wherever we stop at on this booming rally is likely the highest point of the year, and it marks the beginning of the fall. So I do look for that to be near. Not sure if it's this week, not sure if it's next week, but I do know we are close to that time of that setup of that pretty much happening. So we need to be very, very, very careful with that. And then I have to throw out another clue, which I hadn't spoke much about, but usually people start, I guess it's just human psyche, they start to buy when the market moves up like this. But the key thing to take notice of is that we're moving up where VIX is pretty much at the lowest it's been in quite some time. And that right there is a key sign for me to be really cautious on the bull side. Because if you pay attention to the VIX, lows on the VIX represents highs in the market as far as price action. And highs in the VIX represents bottoms in price action in the equities. So I would be very, very, very careful on buying at these levels based on what the VIX is telling us. So from there, I hope this helps. As always, your job as a trader is your most important job as a trader is to protect the capital that you already have, and we do this by knowing and understanding the risk that we have on in each position that we take, and managing that risk in accordance to our account size. This is a very dangerous time in the market right now because we could reverse. The upside is almost minimal to me versus the downside, which could be 10 times as much. So again, this is a time to be very cautious. I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.